Hello student, welcome back to IBS. Today we are going to learn about cash flow statement part third. Now we are going to understand about the use of statement of cash flow. Statement of cash flow is very important for determining company's financial health. Though the net income provides measure of company's success or failure, cash is what a company needs in order to survive. So a company can report high growing net income, but they can show high growing in their net income, but maybe they have negative cash flow from on their operation. For example, if the profit of company is earning are tied up in growing receivable and inventory, it may not have enough cash to pay its ongoing expenses. Increasing receivable can result from sales growth, and but increasing receivable can also result from customer who do not pay their bills on time. So that is a kind of bad thing. So you need to understand cash flow like this way. You need to develop such kind of understanding. If your account receivable is high, that has two potential reasons. Either sales or demand has grown, that is good, but maybe your customer is not paying on time, so that will be bad actually, and you are falling behind because of your follow up, and you're not giving good discount for early payment. So early payment related discount either you're not offering. So these are the things will reflect in cash flow, but actually what is happening in the company only the insider person know. If we are external finance advisor or something, we can only assume based on understanding. We can develop such kind of link, either there is two different possibilities, but we can make it more accurate when we see that their AR has increased and their sales has also increased. So then our assumption is not based on assumption, then this assumption is more on near to the correct assumption. So earlier, if you try to understand more and more, then only you will develop such kind of skills which will help you to analyze in balance sheet, income statement and cash flow. While analyzing all these things, you can suggest anyone that will be more on going to the right direction, and that will be more accurate. Your assumption and your perception would be almost always correct because you have developed such kind of ability. So let's jump to the topic. Inventory. Raising inventory can suggest strong sales, positive sales, if your inventory is increasing. Why your inventory will increase? Because you have sales demand. That is why you are buying extra inventory to sell, so to meet your demand. So that is good. But there is another reason. If your sales or revenue has not increased or something, so if your inventory is increasing, that means you have lot of obsolete or damaged stock. So that may be the reason. Again, while seeing the income statement with cash flow, we can while seeing this, we can go and check our income statement, what is the result. So then you will able to understand and make your correct decision. Okay, so what exactly is going on, you can list out all your finding, and then you can read all together, and then overall you can make your idea what exactly the financial health of this organization. Now the second point is financial health indicator. In statement of cash flow, what exactly indicate you are having financial health related issue? So basically you have net income x amount, then you have operating activity. If that is being adjusted, then your result is coming. If it is in negative, that is serious threat with regard to company operation, or maybe your working capital is in negative, or you are suffering to maintain your liquidity. So current liability is high side or kind of stuff, and you are struggling to meet. You need extra finance to meet this. So these are the indication you will generate from just first part of your cash flow. Then you have investing. If it is in minus, then it is good, and again financing activity, if you see it is positive, so then it means either you are taking loan to meet your operation, then it will be negative. That will be negative indication. If you are taking loan or issuing bond or issuing share or kind of stuff and generating cash, so for what purpose? To do the investment. As you can say, your investment is in minus. So if you are investing, it means you either you are purchasing fixed asset to run your business, so well and good, that will be positive. Or if you have invested into another company, that is all indication that your business is sustained. You are taking extra fund so that you can invest and you can take the marginal benefit related stuff. So your finance team is good, they are managing their cash in good way, and though it is minus, but you are following the tight cash flow or there is aggressive, your company has aggressive business style. These are the indication. That may be good or that may be bad. It depends on company finance team how they are aggressively managing their cash and how their management is. They are able to take risk, so obviously there is potential of getting good return also. Good return, potential to get good return. If you are not taking risk, so your operation will be in positive and you will be having, there will be positive, maybe you are not investing somewhere, there may be not positive, not negative, zero. So these are the things will indicate only you are focusing to run your business, you are not investing, you are not financing. So that will be structure of a stable company or the company who is considered under cash cow. So those company you will love to invest, okay, because this company is stable, they are generating cash enough, so you will get good dividend kind of stuff. So these are the indication. While learning cash flow, while reviewing cash flow, you will get a lot of idea with regard to company financial health. Dividend, investor can use cash flow statement to evaluate if dividend are sustainable. If dividend exceed the operating cash flow, net income, operating activity, and then the result is in positive, so in future they cut may be necessary. So what does it mean? They are trying to say if a dividend is being paid which is greater than your company cash flow, so whatever cash you are generating, you are paying your dividend more than that, then there is a question coming into mind: will this be sustainable business or will they sustainably paying dividend or not? So these are the question will come. When you are paying dividend, still you should maintain your cash flow in a positive manner, so that customer or your investor will have faith and trust in you that your business is sustainable, you are maintaining your cash. So this is also one of the important factor. So next point is growth and financing. Borrowing for growth kind of risky. What they are trying to say, in a company that is growing, borrowing to pay current cash need is understandable because of the increased working capital just growth brings. However, beyond a point, if borrowing to pay current obligation, if you are borrowing more than your certain limit to pay your obligation, is not sustainable because there are limit how much company can borrow. Further, as long as the sales growth is continue, the company will not be in position to repay the debt. If you are keep on taking loan and your sales is not growing a similar percentage kind of stuff, so there is chances, or even though sales is growing and you are not recovering your AR, if there is a lot of AR is keep on increasing, that is also a problem. So sales is growing but your AR should also grow similar percentage, then it is acceptable. Growth can be better financed through increased equity. If you are increasing your equity through that, if you are managing your growth, sales growth, or you are maintaining your operating activity through financing activity, then it is good. But if you are maintaining your operational related activity through the investing activity, like you are taking huge loan kind of stuff to maintain your operation, that is negative. If you are generating, issuing bond share and then maintaining, that is well and good. So a company with high sales growth and a great need of cash to support its increased working capital, that is good. But still, if you are not able to maintain this successfully, then even go bankrupt if it is not been able to appropriately maintaining their working capital. Okay, this is overall the point here. Now we have cash usage inside. In the statement of cash flow reveal that a lender and potential investor how the company is using its cash. For example, a negative operating cash flow and a positive financing cash flow. So basically in your statement of cash flow, operating is negative, investing is not talking about now, and financing is positive. What does it indicating? Finance is positive, so it means you are issuing a lot of bond or you are taking loan. If you are taking loan is not good. If issuing bond and issuing share to support your operation, then it is good. What does it indicate? It indicate that the company is financing its operation with either debt, loan, or through equity. An examination of financing section of the statement will reveal whether debt or equity is being used. User of cash flow statement need to be able to interpret remaining of what he or she is seeing in the statement of cash flow in order to determine whether company is growing pain, and that can be handled through appropriately maintaining their financing, and if so, then whether the company financing is appropriate or whether the company is developing serious financing difficulty that could lead to bankrupt. So this is the overall usage with regard to cash insight. So this is how user can interpret the meaning with regard to your financial statement when they see all these things. If you are seeing this kind of thing, you have to check other statement also, like income statement and balance sheet. That will give you overall idea what exactly the cash flow is saying, whether what you are trying to drag meaning is it accurate or not. That you will learn if you have good and comprehensive information and knowledge with regard to income statement and balance sheet both, and cash flow, all three together. If you combine your knowledge, then only you will able to drag good meaning and good prediction and assumption that will be more accurate and relevant. I think we are done for the day. We'll see you into the next session. Stay tuned. Thank you very much.